Ethereum price forecast. Ethereum continues to find buyers on dips. Ethereum fell a bit during the trading session on Tuesday, only to turn around and show buyers yet again. Ethereum technical analysis. Ethereum fell during the early hours on Tuesday as we continue to see a lot of volatility. Ultimately, I think this is a market that will eventually have to find more momentum. But the reason that we are working off where we are is that we got here rather quickly. But more importantly, we are stuck in that time of year between Christmas and New Year's Day, and therefore a lot of liquidity is out of the market. The $2,100 level should be a significant support level, underneath that a lot of people will be paying attention to, as it has not only been supported in the past, but it is also an area that previously has been rather resistive against buying pressure.
2024, sure, there'll be some ups and downs, for sure. But it should be liquidity driven, business cycle driven, inflation falling, unemployment a little bit higher, rates coming lower, stimulus should be on its way. More cowbell is the way of the world, and it's the way of the world since 2008, and it will continue as so. It suggests that Ethereum may have a really good first half of 2024. The target from using the liquidity indicator would be about 5,300. It's directionally, we should be coming to all-time highs in Ethereum in the first half of 2024.
Raoul Pal, a renowned macro guru and founder of Real Vision, has held consistently contrarian macro views over the past year. When everyone called for a severe recession earlier this year due to fears that the Federal Reserve's unprecedented rate hikes would break the economy, Pal maintained his contrarian outlook, staying focused on what he describes as the bigger picture. According to Pal, this bigger picture is the perfect correlation between the Fed's balance sheet and the appreciation in asset prices across the board. Pal explains that the business cycle is almost perfectly correlated with the activities of central banks, and realizing the depth of that correlation is all you need to become a successful investor. Recessions, inflations, deflations, and all other turns in the business cycle don't matter, Pal adds. As long as the Fed and other central banks continue printing, assets will stay on the rise, some more than others, but everything will continue to steadily increase in price. Pal has also identified two crucial assets that do not just match the increase in the Fed's balance sheet, but significantly outperform it. These two assets are crypto and technology. And like every other person in the digital asset space, Pal is very positive about the 2024 to 2025 crypto bull market. In fact, over the next 12 to 18 months, Pal predicts that we will see a massive increase in the price of cryptocurrencies and other digital assets, starting with Ethereum, which Pal believes is about to hit a new all-time high of 5,300 per token. We will now bring you clips from Pal's latest crypto and macro masterclass as he comprehensively analyzes leading macro indicators and how he expects them to impact the market in 2024 and beyond. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also join the conversation by dropping your comments and observations in the comments section below. Thanks, and enjoy the video.
Firstly, my macro outlook always requires a business cycle framework, because that's really what gives us the juice in the trade. And I'll come on to the secular trends later because they're important too. But the business cycle is really the ups and downs of the economy. So firstly, let's deal with where we are today. Today, the present day, here's the business cycle dominoes that help us understand that present day is where the ISM is today, which is below 50. So we're in weak territory, but not super weak. I thought we'd get a recession. I thought it'd be a mild recession like 1990. I still think we may get a recession. We may skirt it. Doesn't really matter, because as this chart shows, in that kind of gold box, risk assets are way ahead of ISM. They live in the future. The central banks, well, they live in the past. Data they're still looking at is lagging. And so they lag by 6 to 8 months, which is why they're still at peak tightening while the economy is at a trough and risk assets are rising. This will all make sense to you shortly, so let me keep going. Many assets just follow the business cycle. I've got here the Russell 2000. That lives in ISM today. This weak economy is why we've got a weak Russell 2000. The Nasdaq lives in the future, which is why it's strong. There's no weirdness about the dichotomy between the cyclical companies and the secular trending ones. They always have this time lag. It's not some broken structure of the market or this is a bubble, that's a bubble. It's just normal. It's normal that the Russell 2000 lives in present day ISM. It's cyclical. So that's where that is. Crude oil. Same. Crude has been weak because the economy's been weak. Crude oil doesn't forward look the economy. What it does is it reflects the present state of the economy. Another way of seeing the economy as it is today is this chart, the number of states with decreasing coincident activity. So, number of states with bad economic data. That's very high. It's kind of in recession territories. When it crosses this 26 level, we're usually in a recession. Do we get a proper recession or not? Doesn't really matter. Because a lot of that was priced in last year to the assets I care about. The forward-looking assets of crypto and tech, which I'll talk more about. Next year, well, here we start to see the economic indicators picking up. So the Empire and Philly Fed, the average of those is already showing an uptick. They're crossing that kind of zero level to say, hey, growth is about to come back. The ISM news orders minus inventories, this is a classic business cycle indicator, probably the most classic. It gives you a 3-month lead on ISM and it's screaming higher. It's telling us that the ISM is going to recover pretty sharply. And those recession fears, whether we get one or not, will be in the rear view mirror. Things will be getting stronger going forwards. And I know the last 18 months has been tough for many. Your portfolios and everything you owned got nuked in 2022. It's taken people's confidence away. I get it. Also, people have lost jobs. People's revenues have come down. It's not easy. But what I can tell you is 2024 is going to bring new sparks. The transition from macro spring into macro summer will take us from 2024 into 2025.
In the video, Powell takes a look at more leading indicators that he believes prove economic conditions will be much better than others are predicting in 2024. By Powell's estimate, the United States ISM Purchasing Managers Index will be strongly higher in early 2024 and will continue growing until we achieve a more firmly growing economy later in the year and into 2025. As the economy gets stronger, asset prices will naturally continue to rise, which will further bolster the economy's strength. Another reason why Powell is so bullish is that 2024 is an election year in the United States. As is typical of all election years, Powell believes the Fed will unleash a truckload of new credit on the economy, which again translates to higher asset prices. For those still stuck on the theory of higher unemployment or stick inflation in 2024, Powell says none of these things will really matter since the markets, which are forward-looking, priced it in several months ago. Let's get back to the video as Powell discusses his outlook on liquidity in 2024 and what it will mean for crypto assets like Ethereum.
Liquidity. Global M2, simplest form of liquidity, it's rising. It's above zero, going up, full cycle, in play. Liquidity cycle, that is what we want to see. As we get liquidity, it drives assets. More on that in a bit. GMI Total Liquidity Index, that's taking private liquidity, public liquidity. It's the broadest perspective of liquidity we can create. Well into positive territory. It's above the kind of 5% when it gets really interesting and liquidity then accelerates. But it's this year-on-year rate of change that matters most, and it's really going up. Fed net liquidity. You've heard me talk about this a lot, many people on Twitter. Fed net liquidity, year-on-year, going up. It's above zero. The Fed is injecting liquidity. The Treasury will start drawing down on the Treasury General account. The reverse repos trading, and eventually the Fed will give up with QT. Positive. Positive for risk assets. We also have a lead indicator, and this is the kind of detrended liquidity cycle. And here you go, and you can see the forward-looking lead indicator all the way through 7 months ahead. Keep seeing more liquidity. So that's going to be great for markets in 2024. 2024, sure, there'll be some ups and downs, for sure. But it should be liquidity driven, business cycle driven, inflation falling, unemployment a little bit higher, rates coming lower, stimulus should be on its way. More cowbell is the way of the world, and it's the way of the world since 2008, and it will continue as so. Okay, our financial conditions index, it's a great lead, which is why Julie and I spend a lot of our time living in that particular future, which is 11 months ahead of ISM. It actually leads global liquidity by 5 months. And it suggests global liquidity should be, in the coming months, by mid-2024, at 20% year on year. That's a really positive liquidity condition, and that will drive assets. So if we were to price the NASDAQ versus a 20% year-on-year increase by May 2024, as the previous chart showed, would that put the NASDAQ at 17,500 by May 2024? The NASDAQ's actually diverging from liquidity right now, and that's normal at this point in the cycle. So the moment liquidity improves, it explodes higher. That's normal price action, and it may overshoot these targets. I have no idea, but I use this to keep me intellectually honest. Ethereum perfectly works against the global liquidity index. And again, it suggests that Ethereum may have a really good first half of 2024. The target from using the liquidity indicator would be about 5,300. Again, don't take this as written in stone. It's directionally, we should be coming to all-time highs in Ethereum in the first half of 2024. Let's see how that plays out. But it makes me very bullish on crypto assets. Ahead of us lies the monetization of the payments from the COVID cycle. You saw this year in the bond market when they started to try and issue new bonds to pay for some of the interest payments. The bond market freaked out. It's because there's too much debt. And you have to issue an extraordinary amount of bonds. When your interest payments have gone up from, let's say, 1% to 5%, they can't do it. The numbers don't add up. And so something has to change. That something, I think, is they have to bring rates lower, and then eventually they will have to use the balance sheet. And being late in cutting rates is their way to ensure inflation undershoots their target. And I've shown that seems like it's pretty much baked in the cake. And that'll give them the cover that they need to relaunch QE.
Powell believes a global economic reset happened in 2008, with the world's major economies coming to the realization that the two most important factors for GDP growth, demographic and productivity growth, are either flat or declining. Yet, debts have kept piling up, hitting 100% of GDP for most of these economies at different points since then. To delay the inevitable, Powell believes central banks decided that the best course of action was to put the debts on their balance sheets and print money periodically to keep the fragile economies balanced. But by doing so, they passed a point of no return and must continuously and constantly provide liquidity to protect the balance. This is why Powell says he's generally bullish on asset prices, both in the short and long term, because central banks will keep pumping money into the economy, providing the markets with adequate liquidity to keep asset prices up indefinitely. But the flip side, according to Raoul Pal, is that the traditional asset classes are not actually growing in real terms. They are just responding to the continuous liquidity pumps without any real appreciation in value. Because the liquidity being provided potentially means continuous currency debasement without any real increase in purchasing power. Pal's thesis is that everything is wrecked, and the only way out of the GDP disaster is to increase productivity growth. This is where crypto, technology, and the exponential age come in, and why the macro analyst is so bullish on these two important asset classes. What are your thoughts on Raoul Pal's predictions and overall outlook for the cryptocurrency industry during the bull run?